Welcome to this video. Today we're going to talk about AMC. AMC hit all-time lows. It went all the way down. It's now trading at $1.68. And the question is this the end? Or could this be capitulation and is a bottom forming? Today we're going to talk about the latest news, the fundamentals, the technicals, and whether this is still a great opportunity for the long-term investor. So buckle up and let's dive right in. We're now looking at the charts on TradingView of AMC, and we can see it's now trading in the pre-market at $1.67. And we can see in the last month it went down over 30%, so it plunged and a lot of panic selling. So the question is, should you sell at this point? Well, this also looks a little bit like capitulation. We can see that we are in a clear downtrend, making lower highs and lower lows. So when you are in a downtrend, it's not smart to sell at the lows. If you want to get out of the position, wait for it to come up. But the question for today is AMC a good buying opportunity at only $1.67? Let's find out. So what kind of company is AMC? Well, AMC is the largest movie exhibition company in the United States and the largest throughout the world with approximately 860 theaters and 9,600 screens across the globe. So it's a movie theater and they make money through selling tickets, and they also make money through their drinks and food, which actually have higher margins, which is interesting. So here on the investor relation page, we can see the latest news of AMC, and this is one from December 22, and we can click here and we can read AMC Entertainment scores its biggest pre-Christmas holiday weekend since 2021, as more than 4 million moviegoers visited an AMC or Odeon Cinemas location from Thursday through Sunday. So a lot of people visited AMC cinemas this month, which is great, and that brings in a lot of revenue. And we can read here, attendance was driven primarily by Avatar, Fire and Ash, which opened to reported 88 million domestically and 345 million globally this past weekend. So this movie brought in a lot of people to these cinemas. So this is really good news. They had a record since 2021 for the amount of moviegoers, and the new movie Avatar brings in a lot of money for this business. So we're now looking at Yahoo Finance, and here we can read, billionaire buys AMC stock near 52-week low as Avatar bring box office back to life. So this guy is apparently also very bullish, which is very interesting to see. Because here we can read, recent filings show billionaire hedge fund manager Robert Citrone, founder of Discovery Capital Management, initiated a new AMC position, buying roughly 32.7 million shares at an average price near $2. The stake represents nearly 4% of his reported portfolio, a notable commitment for a stock most of Wall Street has written off. So a 4% allocation is actually a lot, especially for a meme stock that is high risk, high reward. So we're now looking on Guru Focus at AMC, and we can see here that the financial strength is a 2 out of 10, which means that they have a significant amount of debt. And the profitability is a 3 out of 10. They are not profitable every year. Their net income is negative. So this is not the strongest company when it comes to fundamentals. Here we can see after the pandemic that the revenue has been increasing, which is great. And we can see the debt decreasing, which is also great. But of course, the stock is also heavily diluted, and that's not really good news. We can here also see in the income statement breakdown that the operating expenses are really high, and that's why there is a negative net income. So if they can reduce expenses, then maybe they can become profitable in the future. And that will be great, but they need time to fix their management. So the question is, how much time does AMC has? Well, some people are worried that this company can go bankrupt. So what is the cash runway? The cash runway measures the implied amount of time that an early stage startup or a company that's losing money in this case can continue operating at a loss before depleting its cash on hand. So the cash runway is cash on hand divided by the burn rate. And here I made a calculator where I fill in all the numbers. So in this calculator, we can calculate how long your cash will last at the current burn rate. So the formula is the cash runway is the cash divided by the monthly net burn. And the cash on hand is essentially the cash and short-term investments of the balance sheet the latest quarter in millions. And you can just go here, you can go to the balance sheet, and you can go to cash and short-term investments, and you can go to the latest quarter, and then you can find that it's 416 million. So you fill it in here, And then the net burn is the negative cash flow from operations. So the cash flow from operation is negative, which means that they're burning money. And you can also find it on the financial statement. So you can go to cash flow, cash from operations, you go to the last 12 months, which is the last year, and it's minus 81.5 million. So we can go back to the calculator and we put in 81.5 million. We period length 12 months because we look at the 12 months. And then we come to the conclusion that this company has a cash runway of 61.3 months. So more than 5 years. And that means that it has a healthy cash position. So the probability of this company going bankrupt is extremely low. And I'm not worried that this company is going to disappear anytime soon. So AMC is a meme stock. And we're now looking on StockTwits, and we can see that the sentiment has become bearish because the stock has plunged so much. But the question is, could there be a short squeeze coming after capitulation? Let's find out. So here on MarketBeat, we can see the short interest ratio and the short volume of AMC. And we can see that the short percentage of float is 8.64% and the short interest ratio is 2.4 days. And that means that it takes 2.4 days to buy back all the short positions. And the longer this number, the better for a potential short squeeze. And the higher the short percentage of float, also the better. So 8.64% is not too high. So I'm not expecting like a massive short squeeze just based on this information. So we're now looking here at bar charts. We're looking at the calls of AMC expiring at 2025-12-26. And we are now looking at the 1.5 and the 2 strike price. And we can see that the open interest has increased a lot, plus 7,319. And this could cause a gamma squeeze, a potential gamma squeeze. And what does that mean? It means that right now, a lot of people are buying cheap call options because the price is so low. And once the price is going to move back up, then the market makers have to buy these shares to protect their positions. And once they do that, it will push the price even higher because they have to buy all these shares to cover the calls. And that is called a gamma squeeze. Well, there is a potential for that based on this information, which I find very interesting. But the question is, at $1.68, is AMC cheap? Well, we're going to look at the price to sales ratio. And price to sales is basically market cap divided by its revenue. And we can see it's 0.18, which is extremely low. And it basically means that the sales, so the revenue, is really high compared to the market cap, which means that this stock is cheap at only 0.18. So based on price to sales ratio, it's cheap. And here on alpha spread, we can also see they use a discounted cash flow model and a relative value model, and they took the average. And we can see that on the base case scenario, it's also super undervalued according to them. And if we go to the worst case, it's still undervalued according to alpha spread, which is interesting. And even if we look here on Guru Focus, we can see that it's modestly undervalued with a true value of $2.34. AMC appears to be very cheap, which is interesting for the long-term investor. But let's look at its economic moat, which means whether it has a strong competitive advantage. And we can type in AMC, we can analyze, and we can find that this company doesn't really have a moat. So AMC has no durable competitive advantage, operating in highly competitive and capital-intensive industry with long-term structural headwinds. So this essentially means that it's difficult for AMC to have like high margins and there's a lot of competitors. And this makes this company a little bit of a high-risk, high-reward company because it doesn't have a strong moat yet. So what are the strengths? Large global theater footprint, strong brand recognition, and high traffic during blockbuster releases, which we saw like this month, and high retail investor engagement. But there are also many risks like extremely high debt burden, long-term decline in theater attendance, and competition from streaming platforms. So we're back at the charts on TradingView and we're looking at AMC, and we can see that now in the pre-market it's trading at $1.69. It's a little bit higher. The market is going to open soon, and we can see that my average cost price is around $2.30, and I'm down roughly 25%, which is fine. I think that the higher probability is that we will see higher highs. I think this company's true value is definitely higher than at the current price, and if it's gone all the way down, I think we could see a potential bounce. That being said, I think this is a high risk, high reward company, and that's why I only allocate like 1 or 2% of my portfolio. which basically means that I'm risking like $1. I either lose the dollar or I can make $10. And that's how I see this company. This company doesn't have a wide economic moat, so that's why I don't allocate like a big position to this company. And this company definitely has a lot of risks. But I don't think that this company is going to go bankrupt anytime soon. And if we look at the price right now, I think it's really overextended. We can see that the RSI is oversold. So I'm expecting a bounce. So let's hope for the best. Let's see what's going to happen. Of course, nothing is guaranteed. Always do your own research, your own due diligence. This is for educational purpose only. I hope you like this kind of content. Feel free to like and subscribe, and I'll see you in the next video.